not that one. This one. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. That means time to check in on your money and find out what Wall Street's doing to us this morning. And yes, I'm sorry for the last couple of days has been to us. On the telephone, Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. How you doing today?
Hey, good morning, Dave. Good to be here. It is halfway through this week, and I guess you'd call this really the last full week of the month and the quarter. We do have a few days straggling next week to close out the quarter, but yeah, yesterday was I don't know, Dave. You just didn't do a good job. It was really a downer day yesterday.
What you blaming me for? You were here too. It was a tech sell-off day. That's for darn sure. The Dow lost 46 points. Yeah, okay. S&P lost 1.44%, down 107. NASDAQ took a bath. They were down 580 points. That's 2.21%. And just to make it unanimous, the Russell 2000 lost a little under 1% as well. Everything I'm reading is they're blaming it all on the chip sell-off, with the fact that the AI companies are eating up memory chips like chiclets, and that's screwing up all the other tech stocks in the process. And now, because the price is going up, even the AI stocks are getting sold off. It's a rotation. Probably the most hopeful sign I can come up with was a headline I poked off one of my tip sheets, saying that the Magnificent Seven correction might be a sign of a healthy stock market. And given the multiples we're buying those stocks at, it really is hard to argue about. We're actually judging them based upon their performance now, right?
Yeah, that's true. So it is. It's interesting that the Dow has become more. I was just looking at the list of stocks. Out of 30 stocks, there's a lot of tech in here. And so it's going to be interesting because Alphabet replaces Verizon. Not sure what that's going to do for the index, and I'm not sure I guess they both kind of communicate. I'm trying to figure out how if you try to keep industries, and they probably don't look at industries a whole lot when they see who they're putting in there. They're looking at more capital weight and that type of stuff. But I just found that interesting, replacing Verizon, a telephone, cell phone communications with Alphabet. So.
It's kind of interesting. You and I were talking about it before we went on the air. Google, or actually Alphabet, the parent company, joins the Dow 30. What do they figure? 30 days, something like that.
I think so.
We were counting it up, and it's like 6 of the Magnificent Seven tech stocks are now on the Dow, which pretty much makes the Dow just as heavily tech-weighted as NASDAQ is. And we did the math, this was months ago, so I suspect it's even more than that now. Like 60 to 70% of the capitalization on the Standard & Poor's 500 is now in tech stocks as well. I mean, it's a tech economy, whether we like it or not. And when we have a chip sell-off like we've had over the last couple of days, all of a sudden, everybody's bleeding, especially if you've got index-based funds in your portfolio. Even if you're trying to avoid tech individual stocks, you're stuck with them, because an ETF or a mutual fund that tries to track the S&P and the Dow, guess what you got a lot of, right?
A lot of tech. That's right. Absolutely. That's the truth. So,
remember,
yeah.
When even Apple says, we're going to have to raise prices with the next model because we can't afford the memory chips anymore, we actually do have a little bit of a challenge as far as chip prices. Somewhere down the line, we're going to find equilibrium, but there's no doubt whatsoever that those high-tech stocks are going through a correction right now.
Hey, Dave, you ready for our frosting?
I would love to hear I would love to hear a frosting. Let's look it up on Reddit and see what they think of it.
Hey, Wendy's, the short sellers are getting frosted today as we look at things happening. The guys on Reddit, they don't like you when you go start shorting stocks significantly. And right now, Wendy's has a 23% short, meaning 23% of the positions right now are short sellers. And guys on Reddit, they don't appreciate that. And so they've gone in there and started buying Wendy's. It's up over 26% right now.
The Reddit gang are disruptors from the get-go, and yeah, your point's taken. There's something ideological in them. They just do not like short selling as a tool, and it's fun to watch, especially if you don't happen to have a short position on the stock they're going after. But I remember when they did that to GameStop a couple of years ago. They cost some heavy bread to some really big investors by running a stock up when they'd shorted it, didn't they?
Yeah, they did. I mean, let's look at that stock. That's you gotta love it, man. It closed at about 625 yesterday
Mm-hmm.
in price, and right now it's trading at 793.
Well, percentage-wise, that's a big butt change, isn't it?
It is. It is a big
That's a
butt change.
Yeah, and if you happen to be one of the people that were betting it was going to go down to 5, somebody's calling your margins right now on those short sales, right?
Yeah, yes, right. Absolutely are. It's yeah, one of those days for you.
I'm
Um,
not a big I'm not a big fan of derivative tools like that anyway, just for the sake of risk-taking investments. So I can't say I'm playing a really big violin for these people, but the folks that get onto Robinhood with the Reddit gang and just purposely cost investors money just because of an ideological distaste for it, I'm kind of worried about them too as to whether or not they ought to be institutionalized for insanity. There's my editorial for the day. Talking about the macro market, the big move of the day is probably going to come after the market closes today. The last of the big chip stocks that we're expecting to report for a little while, Micron comes out. I got a sneaking hunch if they want to save the sector, they're going to have an NVIDIA-like report and just slay the expectations, aren't they?
Yeah, they will. We'll need definitely a good report out of them, and then tomorrow morning, we get a flood of information. Not only do we have the jobs report, unemployment report, but we get the third quarter or the third estimate on GDP, and then we get personal income comes out, consumer spending, PCE price index comes out. We got a lot of economic news that's going to come out in the morning.
Thursday is going to be an absolute flood as far as the data dump coming out of the government is concerned. Today we're going to be watching, I gather, new home sales coming out about 10 a.m. That might draw our attention a little bit away from the tech stocks, won't it?
Maybe depends on how it comes in. Um, they don't expect much of a change from the previous reading. At this point, they expect it to jump a little bit. And then I guess at 4 o'clock, this is the first time I've seen this on my little spreadsheet, but the Federal Reserve Board releases annual bank stress test results today at 4.
Ooh, I hadn't seen that either.
So that
Cross
could
our
be
fingers.
interesting.
Yeah, well, cross our fingers there's no news on that one because any news that comes out on that probably is going to be bad.
Not good news. That's right. Not good news.
Not generally, yeah. Got a couple of reports that came out at the end of the day yesterday, beginning of this. I understand FedEx reported. Did I remember that correctly?
FedEx did report, and they had a really good quarter, Dave. They came at like $6.31 versus $5.96 expected. Revenue was better than expected as well. They are trading down this morning, about almost 6.4%. And here's part of the deal: is they spun off June 1st, which is after this quarter ended.
Mm-hmm.
They spun off FedEx Freight. So it's going to be a separate entity on its own. And so if we look at that, we've got FedEx down 6.4%. We have FedEx Freight up 1.28% this morning. So it won't have its first quarterly report for 3 months down the road. So it'll be September or so before we get some numbers from them on how well they're doing. So
I got to figure that investors will be looking at FedEx package delivery only as a standalone as being way too dependent on 2 or 3 big shippers, and that kind of puts you in a risk position. I would just guess that would be the concern that the stockholders are having without freight being in the mix.
I would think so as well, Dave. I mean, you think how dependent are they on Amazon?
Yep.
Who delivers Walmart? I'm trying to think but I think FedEx does because I had a Sam's order yesterday or day before got delivered and it was delivered by FedEx.
Yep.
So it's yeah, that definitely dependent upon, a few key players.
Yeah, when that much of your business comes from 2 or 3 major suppliers, it probably puts them at a little bit more risk. Any other indications you got?
So we did have one other company reported that is worth noting, and that's KB Homes, the home builder. They beat on revenue, however, they missed by 2 cents a share on earnings. They came in at 43 cents a share, and so they were up earlier this morning. Now they're still up. They're up 4% this morning.
Well, we'll take that happily. Resetting the table, we were bloodbath on the tech stocks yesterday. The blue chips were almost flat. 45 minutes before we opened this morning, you got any good news for us on the futures?
Yeah, it's mostly green on the index side. The Dow is down $15. The S&P 500 is up a quarter of a point. The NASDAQ 100 is up 0.4, and the Russell 2000 is up a quarter of a percent as well. On the other side, silver's just continues to get slammed, Dave. Down another 5.1% this morning, below 60 at $58.93 an ounce. You got to wonder, where's it going to bottom out at? I mean, I remember, it wasn't that long ago. It was in the 30s, and all of a sudden, we were up to the 120. So I feel sorry for anybody that bought it at 120 right now. Gold down 3.1%, Dave. It's taking a beating right now, down to $4,020 an ounce. And then crude oil down 2.8% to $71.15 a barrel.
All righty. Overseas markets are a little different humor than we were in. At the 6 a.m. close, the Asian Rim markets almost exclusively up. The Nikkei in Japan was down by about 0.8%. Everybody else was up. The mainland Chinese markets, one of them up by a full percent at the close. Over in the European community, they're also a little more optimistic than we are. The German markets are off. The UK is up by a little bit, even with their government change planning. The average European index up by about a quarter of a percent or so, halfway through their trading day. Getting my retirement plans together takes a pair of eyes that I don't have handy. I need somebody that can help me with the big picture. Philip, how do I get a hold of you to get that picture?
Dave, I think it's important that everybody out there that's getting close to retirement or who have already retired, make sure they have some kind of written retirement income plan. It's one of the things that I just don't see out there very often at all. Give us a call at 863-382-0037 to get started on putting together your income plan. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we'll do it again tomorrow morning, hopefully with more good news here, same time on Light. You have a good day, my friend.
All right, buddy. You take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week's going well. Join me again tomorrow. Until then, have a great one. Bye now.